Hey Patrick,
Hey, how are you doing?
I'm good. How are you?
Yeah, I'm doing good as well. I'm enjoying the sun and yeah, enjoying life. So I'm doing good. Yeah, quite a good time I had lately. Besides my sleep, my Achilles heel is actually, I would say, 98% back on track. I still need to stretch
Nice.
it from time to time, but besides this, yeah, life is good. The sun is shining. We will go on a vacation to the US in a month. So yeah, I think life is pretty good. How about
hmm
you?
Yeah. Uh, well, I'm not going to a vacation on the US to the US unfortunately,
Mm.
but the weather's been really nice. Crypto has been up in general, so in general I'm pretty good.
Yeah, nice to hear. Um, I actually made a change to my portfolio, and I think we can start with this if you want to.
Oh wow, yeah, sure. It doesn't happen that
Yeah,
often.
yeah. Lately it happened quite a lot, I guess. And you want to take a guess what I did?
If I were to take a wild guess, I would say that you sold your Bitcoin for ETH or part of
Oh
it.
man, nailed it.
How
Yeah,
did it?
it's just that I did a little bit of research, and by a little bit I mean a lot, and and not just in regards to Ethereum. It's more like the the Sharpe ratio of Bitcoin and Ethereum. So just as a quick reminder, the Sharpe ratio is basically a ratio between the upside and the downside of an asset, I guess. I think you can apply it to basically everything you can invest in, right?
Yeah, it's basically a relationship between the performance of an asset and the volatility of an asset.
Mm. Yeah, I think you are more knowledgeable about this than I am because you studied it, uh, right?
Yeah, yeah, exactly. But it's pretty easy to conceptualize. So
Mm.
imagine you have a line that goes up 45 degrees up, it goes just up, up, and up, and it has very
Mm.
little swings like up and down. That then it probably has a very high Sharpe ratio. But if it,
Mm.
it goes up the same amount, but if it swings a lot up and down, then the Sharpe ratio reduces because you take more volatility for the same returns.
Mm. Mm. Yeah, and yeah, thanks for the explanation. And I built up on this, and this is an inspiration I got from Julian. And Julian Host, the CEO of Cake DeFi, he gives his updates about the market multiple times a week. And I'm in this special group. I have to pay for it, but I do get a lot of interesting inspirations out of it. And actually, he's managing a couple of hundred millions. He's quite wealthy thanks to crypto. And right now, his portfolio is somewhat of a barbell approach. It's like a specific portion of his portfolio is like super diversified, super stable. Like if the world goes to shit, he's okay. And the other one is really risk on. And I was wondering if I hold BTC, what is it? Is it risk off? Is it risk on? It's neither, I guess. So this led me to that I actually transitioned 2% of my BTC, 2% of my whole crypto worth, which is basically my whole net worth, um, from BTC to ETH, and this is quite substantial. So yeah, I did this, and I'm still in my 10% stable coins, but right now I'm roughly 60, 70% ish ETH, 23% BTC ish, and 10% stable coins roughly. So I'm trying to get more into the idea of this barbell approach. It's also an approach that is populated from Nassim Taleb, from a concept point of view. And yeah, so this is basically what I did. A pretty long explanation to basically say, okay, I transitioned some BTC to ETH, but I would just like to give you the um, reasoning behind it, why I did it.
hmm what I don't understand is you mentioned that it's a barbell approach, but when I
Mhm.
think of a barbell, I would say you would have a large portion of your assets in low risk assets, and then a long tail, basically tail assets on both sides, in case the market goes up or down. So you have a lot of exposure. So
Mm.
I would actually think like USDC is the part of the barbell that should be in the middle, and the ends they should be something like ETH on one end, and then I don't know something totally crazy on the other end.
Mm.
But I think ETH is a risk on asset as well. So how do you
Yeah.
consider that a barbell when a majority of your portfolio is in the risky part?
it's not a well-balanced barbell.
Okay, I
It's
see.
it's like 10%. My stablecoins are on the left side of the barbell. If I would make it a barbell approach, I would have to sell crazy out of the money. No, I have to buy crazy out of money put options in order to have a really well-balanced barbell. But it's more like from the concept point of view. So the stablecoin are the one side. If everything goes to zero, I still have a little bit on one side, and the other side is basically the risk on side. So I have not much in between. Is basically what I'm trying to say.
I see. I see.
So
Okay.
and BTC is something in between where I think it's not really that risky. Obviously, it's risky, but if you compare um, BTC to ETH, I think ETH has much more upside and a little less downside, and it doesn't make much sense to have BTC in my point of view. But I'm a total ETH bull, and yeah, take it with a grain of salt. I think yeah, ETH will outperform BTC.
Yeah, most likely, Patrick, most likely.
Yeah. Did you make any changes to your portfolio? I know you were thinking about something as well.
Um, no, I've not really made any changes so far. I have some money on Phantom, and I'm doing like a long short kind of farming, but the yields are the yields are quite high, but they're very volatile, and I pay a lot of gas fees to swap my
Mm,
positions a lot. So I'm still considering going to other chains, but right now on Solana, my long short strategy is not yielding that much.
mm,
Like last 2 days or something, it's only been like 18% or something, less than 20% even. And
okay.
this is like borrow ray, supply ray, or borrow orca, supply orca,
Mm,
these kind of things, right? So I'm not really sure what to do with it. And the yields on Phantom, they are higher, the long short yields.
mm,
So yeah, I'm kind of in the tangle at the moment.
mm.
I do want to say that remember when I went to Metis a while ago?
Yeah, yeah, I remember.
Well, it is paying out. So my
Ah,
my, my position is in the green figures, and
nice.
I'm also eligible for an airdrop, and I think the airdrop will be
Wow.
quite big. So it's definitely the total ROI will definitely be at least upwards of well, I don't know, but at least upwards of 20%, 30%, something like this, at
Mm,
least, depending on how big the airdrop is. So yeah, and the airdrop will be next week, so I'm pretty
mm,
curious for that. And also, Jet will have an airdrop very soon, so I
mm,
also expect to be eligible for that since I provided a lot of support to the Jet team.
mm.
So yeah, my portfolio will change maybe a little bit, but I will sell both airdrops to be honest.
Yeah, I actually think it's a really good approach, and don't be as sad if the airdrop is small. I do get a lot of airdrops and have really a lot of experience with airdrops, and it's super rare that you actually get some airdrop which is
Hmm.
even worth it. A lot of the times you get like $10, $20, $30, and most of the times it's not even worth claiming because you have to pay the gas fees, at least on Ethereum. But
Hmm.
fingers crossed, I hope that you get a big airdrop, my friend, and
Yeah,
you get paid
I mean, it will be decent,
for
but
your
I
bit.
I only bridged like 1,000 or something to Metis, right? So
Mm.
the airdrop is not going to be huge, but it's going to be at least in terms of percentage wise quite nice.
Yeah, nice.
And there's also another thing I wanted to mention, but it slipped my mind just yet.
Mm.
Um, no, I'm sorry, it slipped my mind. There was
Yeah,
some
okay.
another thing coming up in terms of an airdrop, but it slipped my mind. Okay, I'm sorry.
Yeah. No worries. What about that we transition to the remarkable things? And if
Sure.
it comes up, we will just pick it up, your airdrop story. Okay?
Yeah, sure.
Okay. Do you want to start with your remarkable things?
Yeah, sure. I will start with some remarkable things. So the first thing is that I've been following this blog for a long time, and it's a blog about play to earn games, and it's a website that also has like a weekly newsletter, and that I follow that, and they do a
Mm.
really good summary of uh, you know basically displaying all what's going on, and they also do reviews and these kind of things of games. So it's like a little bit like IGN, but imagine if IGN had a newsletter, or maybe I'm a little bit old
What is
school.
iGen?
IGN. Oh,
Ah, the bank.
no, IGN, like in GameSpot, like the gaming website.
Oh man,
Oh my
sorry.
God, it's GameSpot, right? It used to be like a big gaming website.
I know GameStop, but not GameSpot.
Okay. Now, well, basically, it's a gaming news website, basically,
Okay.
GameSpot and IGN. But I'm revealing my age because these have pretty much died, I think. I think nowadays it's like Polygon or something. Is the Yeah. Anyway, it's a gaming website about play to earn, and they had an article, a news release that there's a game called Formula One Delta Time, and it's made by Animoca Brands. And Animoca Brands is one of the biggest companies in crypto gaming
Hmm.
and in general in gaming. They're really huge, but they usually do more mobile things. And they announced that with their new title that they were building on, like it's called Formula One Delta Time, and it's basically a race game where you can buy Formula One cars. But
Hmm.
and the game has been out, but the
That
game.
sounds super
Sorry.
boring.
Yeah. I mean, it sounds boring to me as well, but
Mm.
Formula One fans, and there are some racing fans who really like these kind
Yeah,
of
that's
things, right?
true.
And they really like these the detailed car models and these kind of things,
Mm.
like just like Forza and these kind of things. But anyway, they announced that they weren't able to get the license for the new Formula One season, so they are forced to stop the game. So
Okay.
they sold NFTs, which are the cars in the game, and now the NFTs have become useless.
Okay.
So I think this is pretty much a first in crypto gaming where you buy an NFT and it becomes for a game and it becomes totally useless because the game has been decommissioned
Mm.
basically.
So
Um,
they're basically having problems with the IP rights, right?
yes, exactly. So
Mm.
because it's officially licensed Formula One game and they didn't
Mm.
get the rights for the next year or for this year basically,
Mm.
so they have to stop the game basically.
Wow. Can't they just wow.
Yeah,
Okay, that's super dumb from them, I guess, because that's one of the key risks in a business model. How can you not take care of such a situation?
yeah. It's
Or, or, d- or do you think conspiracy theory on they were gambling on it and it's kind of a rug? What do you think?
No, because like Animoca is a big brand, so they thought they would be able to keep afford it, but
Mm,
they weren't able to secure it because Formula One is heating up right now. It's a little bit getting more popular lately, last year and stuff.
mm,
So I guess it just became too expensive, just like some TV channels they
mm,
can no longer afford the football license, right, for the Bundesliga or
yeah.
something. I think it's kind of similar. I don't think that it is intentional, but yeah, it's super unfortunate for people who spent a lot of ETH on those
Mm,
cars. And I checked them on OpenSea, and yeah, they're all going for pennies now, pretty much.
mm,
So yeah,
yeah. Mm, it sucks.
yeah, it really sucks. So that was, I thought that was pretty remarkable, and I hope that doesn't happen to Illuvium NFTs. But we'll see. We'll see how it goes.
Mm.
Um, shall I continue on to my second remarkable
Yeah,
thing?
sure, absolutely. Go ahead.
Sure. So there's been a lot going on with Luna and UST lately. Like
Mm,
the coin has been really popular right now, and there's just been a lot of news around it. You know that they partially collateralized their UST with Bitcoin, or at least they intend to do it.
mm.
S
I lost a little bit sight. Maybe you
Mhm.
can help me at least. Yeah.
Sure.
So I think it's collateralized right now with ETH, BTC, and Luna, right?
No. So right now UST is a purely algorithmic stablecoin, and it works a little bit like Iron and Mai, if you remember from the Polygon days, where
Mm,
you have
yes.
like a stablecoin and you have a risky coin. And to mint the stablecoin, you burn the risky coin, and vice versa.
Mm-hmm.
They're interchangeable for each other. So this is how the UST also works. I mean, in rough lines, of course, there's some nuanced differences.
Mm,
So they are not backed by anything except for the ecosystem and the fact that they're making UST very in demand, right? Because you can use it in Korea to pay for groceries and all kinds of things. So there's a lot
mm,
of demand for UST. So, but what they are going to do is burn some Luna and buy Bitcoin with it, and use the Bitcoin to collateralize their Luna or their USD, sorry. And they're going to buy billions of Bitcoin. So they're going to buy, they're
mm,
buying more than Michael Saylor has bought. So
mm,
they're going to be a pretty big holder. But that's not what I wanted to talk about. Um, a lot of people are concerned, and myself as well, to be honest, that that there is some kind of death spiral for Luna and USD, right? Because they can be converted into each other. And last year around May, I think UST lost the peg for a little bit. And yeah, now it's even bigger. So what happens? What happens if there's like some kind of spiral? And this guy called Pedro Ojeda, I don't know him, but he did an analysis, like an analysis basically, or how do you call it, a simulation, where he did a death spiral scenario for Luna. Like what would happen if the if Anchor fails completely, and 100% of all the UST on Anchor wanted to exit the Terra ecosystem. Like what happens to Luna? And just so you know, whenever you swap Luna from to UST and vice versa, you pay a small fee, and that fee goes to the stakers of Luna. And basically, the TLDR is that when in a case scenario where Luna falls to $5, the yield you can get on UST is around 6% interest, and then in UST, and then around between 1 to 24% in Luna as well. So basically, the more Luna crashes, the higher yield you get on your stable coins from UST. So it's kind of like counterbalancing. So yeah, I thought that was kind of interesting. But this does assume that you have 70% of all stakers that currently stake Luna that they don't stop staking. And basically, he also assumed that what if half of all the stakers stop staking, then you still get around 60% yield on your stablecoins. Yeah, so basically, it made me a lot less worried that there would be like a death spiral, because the more Luna falls, the higher the yield on your stablecoins.
So, what does it mean? Do you think that so for me this was too much information,
Yeah, sorry.
to be quite frank. So what does it mean? Does it mean that Luna is so the whole ecosystem doesn't make much sense, or does it mean that
No, it means that it has a self-balancing mechanism, so that the risk that UST will lose back is not that huge, because if it tries to lose back, you have other mechanisms that force demand for UST, and which increase it back again.
But isn't the point of backing it with BTC that it's not just purely dependent on Luna? Even if Luna goes to $5 and I have no idea where it's right now, let's say 90, 100.
Yeah,
Isn't
that
that
is true.
the whole idea behind backing it with BTC, that it's not just dependent on Luna?
Yeah, that's true. But what I showed here was an analysis if Anchor, if all Anchor yields, if all Anchor LTV exits Luna. I do think Luna is inherently, yeah. I guess Do Kwon recognizes that there's inherent risk with Luna, and this is why he's collateralizing it now. But this is the case of Anchor, at least, and yeah, I mean Anchor is the big, by far the biggest protocol on Luna. So if it can survive Anchor completely draining, then it can survive a lot of things basically.
Yeah. So just to help me out here. So it's not actually that they wanna back Luna with BTC and not the Anchor yields with BTC.
I think they wanna back Luna with BTC. So yeah.
So I'm just curious because I think there is just one scenario where basically the whole Anchor could drain within 1 second, and it's called a hack. And I think this is the biggest risk to Luna, because if there is a hack, it's like 20 billion or whatever, right? It's basically one of the biggest honeypots out there.
Yeah.
I think, yeah, then the backing with Luna of BTC could make sense. But yeah,
Yeah,
I have
it
not
is an
much
admission
more.
that there's something wrong with Luna, right? Otherwise they wouldn't back it. But at the same time, yeah, basically I was a lot more worried than I am now. Like I think, yeah, basically, unless you have some kind of black swan event where you have a hack of Anchor or something, I think at least in the foreseeable future we won't see a major depack from UST. And I'm confident enough now to deposit a percentage of my portfolio into Anchor.
Yeah, cool. I also read that they will lower the rates, the APR. Have you read it as well?
Did you read it recently, like this week or last couple of days?
The last couple of hours, actually.
Okay, yeah, I thought it was a
Yeah.
proposal to reduce it, but I'm not sure if that also goes for smaller stakers.
Yeah, so the proposal got rejected, I guess, but I just read it like 2 or 3 hours ago on Twitter, like, okay, it's confirmed that the yields will drop. But yeah, I'm a super Twitter noob. Maybe I got clickbaited into something. I have no idea. So we need to do a little bit more research there. But
Yeah.
I thought it was interesting that they decided to lower the rates, but it could be clickbait and it could be totally wrong information. So please do a little bit more research, dear listener, I guess.
Yeah, I will I will read that before I deposit.
Okay, perfect.
Cool. What about you,
Yeah.
Patrick? Do you have anything remarkable?
Oh yeah, my friend, I have something remarkable. Yeah, where do I start?
Start
So
with something that prints money.
I can tell you something that does the opposite of printing money. It's yeah, my decent yield farming story continues, and I would like to tell you what basically happened. So
Sure.
so I'm doing some, let's say, more on the edge yield farming for about 2 weeks right now. And over the last 2 weeks, I entered basically, well, not over the last 2 weeks, but let's keep it in this frame because this is where the events happened. So I got rugged 2 times actually, and I lost a lot of money. And it's maybe a learning experience, and I shared it with you, the listeners, right now, and then we can go to a different topic, or we can go more into it. So I got hacked basically, or I got the victim of being a hack 2 times. The first one is on Phantasm, and Phantasm is slash was or slash is because they relaunched a protocol on Phantom, and they basically got hacked, and their treasury basically got drained, and I had about $1,000 in there. So $1,000 within 1 second gone, and yeah, so I'm totally wrecked there. This was the first one, and the second one happened actually yesterday. And at first I thought, okay, this is a hack, and I will explain the hack real quick, and then I will tell you my exposure. So there is this token on Solana which is called Cash. It's printed from Cashio, and you basically have to supply USDT, USDC into a Saber pool, and you give Cashio the LP token, and then you can print Cash. And Cash is basically a collateralized stablecoin because you bring the collateral of USDT and USDC. And yeah, they had about 50 million of total value locked, and now it's bam, 0. And this totally sucks. At first, I thought, okay, I got lucky because 2 days before the hack, I exited big positions, so I had I guess half of my stablecoin farming in cash, and 2 days before the hack, I exited by luck. But yesterday evening, I noticed that I was speculating on an airdrop with another wallet, and I lost roughly $2K due to that hack, and it totally sucks. So maybe the big learning experience for me, at least, is the following, and I need to wrap my head around it. So I basically yield farmed with, let's say, $2,000 of cash, and I got about 25% APR on this yield farm. So if everything went well, I make like $500 within 1 year, roughly, right? And so, but now I have 0. So I basically lost $2,000. And in order to compensate such a rug, I need to have 25% yield on the same amount for 4 years to compensate for this. And I think I'm totally, yeah, I was totally unaware of the real fact of what a hack can actually do to you, and that you are exposed to a hack. What this means for you, because I risked $2,000 in order to make let's say $100 or $200 a year more in comparison to just sticking to USDC and farming USDT for, let's say, 15% or so. And yeah, so I basically the bet that I took, which I wasn't aware of, is I do have this big risk of getting hacked and losing basically everything for, let's say, 10% more APR. And yeah, so now I got basically bitch slapped to my face. And yeah, it's quite of a harsh learning experience. So for me, this means that I will stick to purely coins and protocols that are legitimized, that are legit. So even though I might miss out on some APR, but I don't want to have any exposure at all to some crazy algorithmic stablecoin. I don't want to have any exposure at all to some crazy over-collateralized stablecoin. I don't want to have any exposure at all to any crazy bridged coin. I would just stick to legit APR, like 4 to 12% or 4 to 15% on USDT and USDC. And I don't want to take the risk of doing something more crazy. I think Anchor is an outlier because they have this really huge TVL, and you can argue that they are quite safe because they are Lindy effect, right? The honeypot is there for multiple months or even a year. I have no idea how long Anchor's life. But everything else, Mark, man, I got totally wrecked, and it feels totally bad, and I wasn't just aware of it. So yeah, I got hacked basically 2 times within the last 2 weeks. I lost about $3,000, and in order to compensate for the $3,000, I need to do multiple years of farming to get break even, and it's totally not worth taking the risk. It's basically the TLDR of it.
Yeah, that's really unfortunate, Patrick. Like, I mean, cash. I thought it was pretty DJ, but at the same time, it is over collateralized, right? We even discussed it last time, so
Yeah,
I wasn't totally not afraid of the backbreaking. But yeah, a hack is of course something different.
yeah, exactly.
Yeah, I checked the audit report, and they forgot they basically forgot a line where they check the account or
Yeah,
something. So
yeah.
yeah, that's
This
really
is a big
unfortunate.
learning. Yeah, this is a big learning experience for me. So the the theory of it has a peg to USDC and USDC. This is nice. This is legit. This is stable. But the infinite mint hack, which is basically the hack that happened, so the smart contract risk, yeah, I was just totally not aware of it, and yeah, it sounds so dumb, but I'm in crypto for almost 5 years by now,
Hmm.
but I think some things you have to learn, and in order to be aware of it, and yeah, so
I do
the
have a
story
question
will
though,
continue, I
Patrick,
guess.
because you mentioned that you withdrew your money like 2 days before or something, but then you had another wallet where you were airdrop hunting, and you
Yeah,
lost $2,000 on that one. So
yeah.
what happened? Did you forget to pull out your position on your airdrop wallet or something?
Um, uh, there were two answers. The first one is it was on multiple wallets because I did airdrop hunting usually on multiple wallets. And the second one is that I totally forgot that I airdrop hunted. Um, I don't have a good spreadsheet where I track it. It's more like, okay, I enter positions, and I was speculating. So I actually started speculating on this airdrop in early December. So I totally forgot about it.
Okay, so you had an LP position on Saber of cash and something else since
Yeah,
December, basically.
Cash USDC,
Cash
exactly.
used to see. Ah, okay, I see.
So
Okay.
to be concrete, and I still have this position because Cashio is working on providing a solution in partnership with Saber and Quarry. So I basically got into a LP position with Cash USDC. I deposited on Saber, and I took this LP position and deposited on Quarry in order to get even more yield. So yeah, Quarry, Saber, and Cashio, they're working together to
Yeah.
somehow compensate. But I think the money is gone. It totally sucks.
Okay. Wasn't there something where the hacker gave money back for smaller accounts, something that did less than 100K?
Yeah,
Or did that not turn out to be true?
yeah, it's true. But for now, the protocols. The hacker did basically like this. Um, they so let's say you had this LP position and you were on Quarry. They basically gave the amount that you had in USDC to the token account on Quarry. So they did not send the USDC to your wallet. They put this USDC into the token account of Quarry, and only Quarry can give you this money. And right now, Quarry, Saber, and Casio, they're working on a program on how to claim your USDC, but not everyone got the USDC. So I'm in multiple discords right now, and I'm talking to multiple guys and girls about if they got refunded basically from the hacker. A couple did, a couple did not. So yeah, I did my research.
Okay, I see.
I couldn't find anything that I got that I got refunded. So I think I'm just unlucky again, because I didn't get refunded, but some guys got refunded. Yeah, multiple tens of thousands.
Damn. And your Phantasm, yeah, that you said they are going to do a relaunch. Are they
Yeah,
going to give anything to the people who were wrecked in the previous token?
yeah, they relaunched yesterday, and but I think it's just a marketing gag, because when the rug happened, I had roughly 7 FSM. This was their native token, and this was worth roughly $500. But they will refund the hack with the current market price of the new token, which is called FXM, and right now it sits at about $5 or so. So yeah,
I
wrecked
see.
again.
Okay,
So
so you get an airdrop, but yeah, too little to
yeah,
be worth. I
too
see.
little, too late, I guess. Like 98% lost value. So yeah, yeah,
Okay.
Mark,
Yes.
this is actually a good learning experience, and I'm happy that this actually happens right now in my yield farming experience. So I want to become a world-class yield farmer, and I prefer to lose now a couple of thousands in comparison to losing multiple tens of thousands or even 100,000 one day. I, I hope this happens one day, because then I would have a much larger portfolio. But for now, it's just, yeah. On the last podcast, I told you I want to find out where the edges are with my yield farming, right?
Hmm.
And yeah, I think I find my edges.
Okay.
And yeah, it's just part of learning experience, I guess.
So does that mean that you won't go to new degen yield farms in the future? I mean, non-stable coin related ones, just regular degen yield farms, like Sunny was.
Yeah, I can't answer this in that broad sense. I will do my due diligence in multiple ways, like is the team legit? Is the code audited? Do I need to lock up something? Who? So where do I get the yield from? Is it a PvP game? Is it a PvE game? Yes, it's just a longer answer, I guess. It depends, is basically the answer.
I see, I see. Okay.
Yeah.
Did anything else remarkable happen?
Um, not not really. I think we can transition to the exciting things if we want to.
Sure.
Okie dokie. I guess you don't have anything right now this week, right? So I will just start, okay?
Yeah, sure.
Okie dokie. So I am excited for and I would like to share this with our listeners. So I'm excited for a protocol on Solana, which is called LIFINITY. And we talked about LIFINITY on our evening meetings. But I would just like to give our listeners a quick TLDR, because I think it's super interesting. So most of the times, if you ask a developer, okay, developer, why did you decide to build on Solana? They usually give you what answer? What answer do they give usually, Mark?
Um, they got money.
Yeah, that's one answer exactly.
Well, why? Well, because it's Rust. It has a nice financial ecosystem. It's the fastest chain. Yeah,
Yeah,
like
exactly.
yeah.
Exactly. Yeah, so they usually say high transactions and fast settlement. And so Lifinity actually takes advantage of this high transaction. So it basically works like this. So they have their own liquidity pools. And say, let's say, for example, they have the pool Sol USDC. They have their own liquidity, and they have a concentrated liquidity curve. So let's say, for example, Sol trades at $100 right now, roughly. Then you can basically be a liquidity provider, And on Uniswap V2, you are basically providing liquidity over the whole range. So you are providing liquidity from $1 of SOL up to an infinite amount of dollar of SOL. And this means that you need to have a big liquidity pool. So you need to have a lot of liquidity. And if you want to provide liquidity in narrow ranges, you can basically concentrate your liquidity, and you can say, okay, I just want to provide liquidity between $100 and $101. So you need less liquidity in order to be a good market maker. And they have their own liquidity pools, and they are basically taking advantage of this high transaction volume of Solana, because they have a really narrow band for the liquidity, and they adjust it a lot, so they can capture a lot of fee rewards. This actually gets paid to the people who hold their NFT, which is called flares, and they're actually able to make a profit due to their awesome concentrated liquidity curve. And so it's a super interesting model. They have like 100 to 10,000 times more capital efficiency in comparison to normal AMAs, because they can just have those really narrow bands. And they also have an update, an upcoming IDO. So I think, and also they have this super smart dude, which is called Durden. Durden, he has multiple videos on YouTube about the tokenomics, about the protocol itself. So I'm getting quite bullish on this. I'm getting bullish on the concept of this highly concentrated liquidity. I'm getting bullish on actually, if you buy the NFT, you get like 85% of their revenue as a share. And I'm also getting super bullish about the idea that you just need little liquidity in order to provide a lot of market making possibilities. So yeah, I just think I'm excited about this, and I want to learn more. And I'm actually in contact with Burden right now on Discord, and I would like to learn more. Maybe get him on the podcast someday. This would be really awesome,
Nice.
so that he can explain it a little bit more detail. But there are multiple protocols out there who do similar stuff. I think Orca with their Whirlpool there started something similar. Then there is also Creamer Finance. But yeah, I think after listening to the tokenomics and after listening to how Durden explained it, I'm impressed, Mark. I'm really I'm really impressed. Yeah, so this is basically something I'm excited about. Yeah, do you want to comment on anything about this?
Yeah, so you mentioned that they will have an IDO, but they also have their Flare token, right? Or their Flare
Mhm.
NFTs. So what is the difference between these? Like, what are the benefits of both?
Mhm. Yeah, I listened to roughly 2.5 hours of tokenomics, and they talked about it, I think, for half an hour, but I just listened to it once, so I'm not fully educated. I think, oh man, whatever I say right now is wrong, but I
Okay.
can just tell you that the benefit of the NFT is that you get a share of the revenue. I'm not sure if you get an airdrop allocation. So on the Solana ecosystem, they have this concept. I could take a guess that they do it similar. So you can buy NFTs, and multiple protocols did it. And if you have this NFT, you're getting basically, let's say, a 10% airdrop of the IDO vested over 12 months. That's how some protocols do it on Solana. So I could take a guess that those NFT flares, they work similar. And then the token in and of itself, I forgot about it, and I
Sure.
need to do a refresh on it. And I'm not even sure if they released the the full details about the token. I noticed today, so we record this on the 25th of March, that so Durden just put out an announcement on Discord that the sixth part of his tokenomics series just came out, and they need to read up on it. And I'm pretty sure that he talks about the IDO on the sixth part a little bit more, but I do need to do some more research. But
Sure.
I'm thinking about aping into the NFT, because Durden sounds super smart. The protocol sounds super legit. The tokenomics, I'm really impressed. So I think this could be actually a good investment. But again, no financial advice. I will most likely ape in uh, because it sounds legit. But yeah, other protocols sound legit as well, like Yearn Finance, and the token goes down only. So yeah, no financial advice, I guess.
Hmm. And the FT also looks pretty cool, I think. So at
Yeah,
least you have that in the worst case. But
yeah,
yeah, it's definitely interesting. I want to read up on it as well because I like in general AMMs that are special. And I think the unique thing about this thing is that they have they market make their own pools, right? And for
mm,
instance, Orca, I don't think they do that. They just let the market do it.
mm,
So this is how they offer extra yield among other things. So yeah, it's quite interesting.
yeah.
And
It's
yeah, and they pick some really important pairs, right? So yeah,
yeah,
I'm just thinking, Patrick, this is so bearish for Saber, like Saber is getting so much competition with
mm,
Orca constrained liquidity pools. You have now Lifinity.
mm,
Radium has a collaboration with SushiSwap as well. So it's like, yeah, there's a lot of
mm,
yeah, there's a lot of competition on Solana in the tech
mm.
space.
Yeah, for sure. And it's actually funny that you mentioned that you're bearish on Saber. I think that um, they are aware of it, absolutely, and they just started their Saber wars. So yeah, different protocols are now in the process of making it like Curve basically on Saber. So they are aware of it, and I think they need to innovate, otherwise they will get wrecked. But they are working on it. So the Saber token pumped over the last couple of days
Hmm.
due to this, and yeah, it's just yeah,
Oh, okay, can I ask you one more question about Saber before we
yeah, sure.
close this off? I noticed that you can stake Saber into Sunny, and you get some kind of different token like Sunny Saber or something, and you get like
Hmm.
300% APR or something crazy like this.
Hmm.
But it's not you can't swap it back like you burn your Saber. Do you think this is legit? Like what's going on with this part?
I think this is the curve wars that is which is going on.
Hmm.
So I think um,
Is it
they're
like convex
making
or something that Sunny is
yeah,
convex
exactly,
and
exactly, exactly.
okay, but why do they offer? Yeah, okay, I guess so. The Sunny Saber is basically the same as the CVX, CRV, CVX or something,
Yeah,
basically, where you burn one token and you generate a new token that is like similar to the other one and takes the fees from the other one, right? Something like this, I guess.
yeah, something like this. So it's not the exact one. It's pretty complex, and I haven't wrapped my head around it fully. But from the idea, it's yeah, they're basically doing something similar. Um,
Okay.
you can do really nice arbitrage sometimes there. So I'm in the Discord channel of the Grab protocol, and there's a Solana chat, and they sometimes trigger you and say, okay, VE Sunny is having funny rates again and stuff like this, or VE Saber, and yeah, I
Okay.
don't know what's going on there in full detail,
Yeah.
but yeah, I think interesting things are going on there.
Yeah, for sure. Cool.
Yeah, I do have one quick question for you, and then we can continue to the Solana portfolio change if you want to.
Yeah, sure.
So I have a question mark, and I'm struggling with something, and maybe you can help me with it. So, to give our listeners and you a little bit more context, I was listening to a Twitter space from Naval Ravikant a couple of weeks ago, and Naval, he's super, 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 super awesome. He's so inspirational. Sometimes you listen to him for an hour and you think, okay, I heard it, but then he says just one sentence and it resonates so much. And he said something on this Twitter spaces in regards to how social media works. And in my real life, I'm working in a company where we are basically professionals in social media. But he phrased it in a way, Naval, which really resonated with me, and I would like to hear your advice on it. So he basically said that the job of media is to make you angry, and they are putting out messages, and they're basically asking you every single second, "Are you angry yet? Are you angry yet? Are you angry yet?" Because they're basically trying to play with your emotions, and I totally understand it. But the concept of "Are you angry yet? Are you angry yet? Are you angry yet?" This resonated with me so much because whenever I go to Twitter, I I do feel uncomfortable because you just need to scroll and then you see one doom message like, this chart shows that Bitcoin will go to 1K because commodities and recession and blah 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 blah. So I'm getting angry and I don't like it and I would like to avoid it. So my question is basically, um, do you have any idea on how to get alpha from Twitter without getting all that emotional draining stuff? So how can you use Twitter? Because I think there's really important alpha out there, but I hate it that I need to get emotionally drained like 99% of the time in order to find the 1% which is alpha. So I prefer for now to avoid Twitter at all, but maybe you have an idea on how to use Twitter in a way that the emotional draining stuff basically gets cut off.
Well, yeah, this comes to the part where I'm a psychopath, like I mentioned before. So
Mm,
when I read Twitter and I read something negative, I don't really get angry that much, like in general, in most cases. Of course, there's some things that I don't like reading, and I follow a lot of, things about geopolitics and these kind of accounts, so they never come with good news. It's always bad news, but still
yeah,
I listen
exactly.
to it. Um, I think it's just, yeah, I think anger is just the way you respond to it. Like
Yeah,
the it's just a couple of letters on a piece of on a piece of a screen, and it's neutral. I think your reaction is you know is what is under your influence. So how come I don't get angry when I read something and you get angry? When we both read the same negative news. I'm
yeah,
not
because
I'm not entirely
because
sure.
I think you gave the answer yourself. Um, you are in quotes psychopath, and I mean this not in a harsh way, but I can't suppress my emotions. I'm really emotional about other things, and I don't want to suppress my emotions. I understand from the rational point of view that it's just letters and words, but it makes me fearful reading this stuff, and it drains my energy. It makes me feel, man, what am I doing here? And yeah,
Yeah.
I, for me at least, I need to find a way on how to not see it and how to avoid it. I know this may sound dumb. It's like, okay, I don't see it. It's not out there, but this is how my brain works.
Well, what about following reputable accounts like, I generally don't follow accounts that cause a lot of drama. So, uh, I mean, I mean, like, not drama as in affectful way. Like, if some war happened in Ukraine or something, of course I read that. But I mean, like some Twitter influencers starting drama with some other guy in crypto, for instance,
Mhm,
right? These kind of dramas,
mhm,
I don't follow these kind of people. So. Yeah, I generally don't get exposed to it too much on Twitter because I only follow people that are smart and that I like. So,
mhm.
of course, I may see messages that, this guy thinks Bitcoin will drop 30% or something. These kind of messages. Yeah, I can't give you any advice on how to avoid those because usually, yeah, basically you want high signal, low noise, and then high positive signal and low noise, basically. So,
Mm,
surround yourself with positive people
mm,
who post positive but realistic things.
mm. And do you do this by just following and unfollowing, or do you make a list? What's possible with Twitter?
Yeah, so. You can make lists as well. So what I do in general is that every year I completely go through my whole Twitter followers and then I copy them to a list. So
Mm,
for in the past years, I have my followers for like last year, April, the year before April, and you can see how the people you follow, they evolve over time basically.
mm,
So yeah, basically I follow and unfollow people a lot based on
mm,
what they say. So I kind of tune my own algorithm kind of
mm,
by but I read Twitter in a chronologic way, and you
mm.
probably have it. Oh, maybe this is an important factor, Patrick. You should put Twitter on chronologic instead of making it AI driven, and
Ah,
that way you only see messages from people that you like and retweet, but you can turn retweets
yeah,
off as well. I think this helps a lot. That then you are more in control of what you read.
yeah. They are actually suggesting me sometimes, or most of the times, things from people who are not even followed.
Yeah, exactly. Yeah, so
And this is the stuff that I can't avoid.
yeah, exactly. So you need to switch it to a chronological, and then you will only see
Mm.
posts for people that you follow.
Ah, okay, awesome. Yeah, I noted down. Thank you. That's good advice.
Cool.
Okay, yeah. In regards to time, what if we transition to the Solana portfolio challenge and do it a little bit quicker so we keep it uh, under an hour this episode?
Yeah, absolutely. So I'll
Okay.
start. So
Yeah,
last week I had around 743. Now it's 775. So I gained
dollars,
20,
right?
yes, dollars. So I gained around 25 bucks or 4.3% roughly. And
Mm,
I underperformed Solana. because I have a lot of stables, and also I was extra lazy because I was gonna do some long short orca farming, and I forgot to actually deposit my orca. So I borrowed it, but I forgot to deposit it. So I had $200 worth of orca sitting in my wallet for a week, and I didn't do
Yeah.
anything with it. So yeah, pretty bad job on my side.
Yeah, just borrowing and don't putting it to use. I think that's the opposite of yield farming, right?
Yeah, yeah, exactly. So yeah, this partly explains my
Nice
performance.
concept. You're
So
basically shorted yourself.
yeah, pretty much.
Nice.
So what about you, Patrick?
Yeah, so I had a good week because I'm much more exposed to you in comparison to you. So I went from $440 to $490, so roughly 11% gain. And so yeah, my portfolio is still way lower than yours because I think 2 months ago you decided to go into stables and I decided to stick to the risk on assets. And yeah, so I underperformed Soul, but with a small margin, like 1% or so. And yeah, so I'm mainly sticking to chess, katana, and friction. And I feel comfortable in this. I sell options, I get a yield, and yeah, I like it. I don't want to have so I don't want to bet right now on the market going up or the market going down too much at least. So yeah, I feel comfortable, but nothing special. Just a good week because crypto went up. But if crypto goes down again, yeah, I'm basically much more exposed to the risk than you are. So yeah, I'm just basically sticking to my friction, katana, and chest finance right now.
Okay, and you're not airdrop hunting because a lot of protocols launched last week and the last couple of weeks.
No, actually not.
Okay, okay.
I think it's not worth airdrop hunting on Solana and on newer protocols. I
Hmm.
think it could be worth airdrop hunting for Friction, Katana, and Just Finance because they have a roughly 25 million or sometimes even more of TVL. But if you yield farm or if you do airdrop hunting on a new protocol, man, I did so much airdrop hunting over the last couple of years and I get so much airdrops which are worth like $1, $2, $5, $10. It's just a waste of my time and it's just not worth it. It's totally a waste of time.
Okay. I actually remember what I wanted to say like 20 minutes ago.
Okay.
I was talking about airdrops on Metis and stuff, right?
Hmm.
And what I wanted to say is that my airdrop on Astroport is working out well. So a
No.
couple of months ago, when Astroport launched, Astroport is the leading DEX in Terra.
Yes.
I deposited USD, USD Luna basically that pool, and I got airdrop tokens as part of basically the launch. And I didn't buy it, but the token has
Hmm.
gone up a lot, and now it's
Okay.
actually one of the biggest DEXs in crypto. It may even overtake Uniswap at some point. So yeah, sometimes it's definitely worth participating in the launch of a token if you just supply liquidity and don't buy the token directly.
Hmm. Yeah. Um, yeah. Good for you, I guess. But try to limit your exposure is my biggest advice I can give you, because those airdrop tokens they usually underperform the gas token a lot.
Yeah, but yeah, if you supply liquidity and you don't get rocked, then at least yeah, it can be worth it, right?
Yeah. Don't be greedy is what I'm trying to say. I got greedy over the last couple of years in airdrop hunting, and it never played out, and I lost multiple thousands, sometimes even tens of thousands just by being greedy. And yeah,
Hmm. Yeah, fair
take your
enough.
profits.
Fair enough. I will once they unlock. They're locked, unfortunately.
Okay, I understand. Yeah, okay. This is maybe the reason why they are so valuable
Yeah,
because people can't sell. Um, okay, yeah. Do you want to wrap it up?
sure.
Okay, okay. Yeah, we kept it under an hour. Awesome. I think some really cool points in there. I will need to do a little bit more research about Luna because I think the 20%, even though they might drop to 15%, I think it's good for the stablecoin farming. So at least this is something I took out of this episode.
Hmm.
I hope you took something out of this as well. And yeah,
Yeah.
have a great weekend, my friend. And yeah, see you next week. Take care.
Thank you. See you. Bye bye.
Bye.